Hey, Bulls and Bears, I hope you are well. Let's talk about the car market and, in particular, vehicle prices and loans. People are really starting to get behind on their loans. It's getting really bad, just as we said it would here in the fourth quarter of 2023. Let's go to Bloomberg right here to begin with, and let's see how they're putting it over there. Car owners fall behind on payments at the highest rate on record. Wow, that doesn't sound too good to me. How about you? The risk of vehicle repossession is rising for many Americans facing a budget crunch. Folks, we knew this was going to happen. A lot of people were just surprised at how long it's been as far as the bubble finally starting to deflate. Prices are coming down somewhat. They came down again in the first half here of October of this month being October, of course. We'll talk about that here in a little bit. But first of all, how bad are the delinquencies for the auto loans? Let's go ahead and read into this a little bit. Now, for this, let's go over to Business Insider. More people are missing car payments, and another ominous sign for the economy. And here are the numbers they are putting out. The rate hit 6.11% in September. That's out of Fitch Ratings, also reported by Bloomberg. A record number of subprime borrowers are behind on auto loan payments more than 60 days. And here's how they're putting it over at Business Insider. Analysts predict auto loan delinquencies will continue to rise into 2024 and peak about 10% before they start to fall. I really disagree with that. They're saying that they're going to peak at 10%. I think it's going to be a lot more than 10%. We're only at 6% right now, and we've barely even seen automobile prices come down. So think about what's going to happen when more of these vehicles are underwater, when values really begin to plummet. More people are just going to hand over their keys to the lender. And that's when you'll really see, I think, defaults spike way beyond 10%. Of course, they're always going to be optimistic as far as some economists coming out that's on the news networks. They're not going to come out and say, yeah, car prices are going to crash by 20-30%. Why? Because they don't want to alarm everybody, and that would be basically a self-fulfilling prophecy, because the fear that they put out there, or their prediction that prices are going to crash, would then cause people to panic more, and one, not buy a car now, or two, possibly stop making their payments on their car. And that would really cause this implosion to, I think, pick up speed, pretty drastically. But vehicles, cars and trucks, SUVs, all of the above have been overpriced for a very long time, even before the 2020 health crisis and supply chain issues and skyrocketing inflation starting then. I think they were even expensive before then. And we saw it even before 2020, where auto loan debt was increasing drastically. And even before 2020 became worse than what it was during the financial crisis, or before the financial crisis. Now, let's go ahead and take a look and see what NerdWallet had to say about prices recently here. This just came out in September. The average monthly car payment is $729 for new cars and $528 for used cars, folks. Those are some hefty, hefty payments. And you add on insurance and everything else that goes along with this, registration fees, just filling up the tank, of course. The cost of owning a car is in the thousands of dollars a month now if you're financing. And the cost of car insurance, in my opinion, has just become bonkers, especially in the last couple of years. I was talking to a client about his finances, and just his car insurance alone was $250 a month. $250 a month. I think he had one speeding ticket. Maybe it would have been less, but $250 a month. You're talking about what, $3,000 a year just in car insurance. That's outrageous. And with this outrageous price trend and high vehicle prices, we've seen people keep their used cars for longer now, and just opting out of buying a new or even a used car, and just keeping their car running for longer. And therefore, we see the average age of vehicles on the road is actually at an all-time high right now. I believe it's about 12 years old is the average age of a typical vehicle on the road right now. So you might be asking, what's going on with prices? Have prices fallen? Again, yes, they've fallen for the first half of October. Let's take a look here. This is per Cox Automotive. Wholesale used vehicle prices declined in the first half of October. Let's zoom in a little bit and see how much they went down. Used vehicle prices decreased 1.6% from September in the first 15 days of October. The mid month Manheim Used Vehicle Index declined to 211, which was down 3.3% from the full month of October 2022. The seasonal adjustment minimized the decrease. The non adjusted price change in the first half of October dropped 2.2% compared to September, while the unadjusted price was down 5.5% year over year. So there's the real price, folks. The just the raw number price down 5.5% year over year. So to put that into perspective, 5% on a $40,000 car, you're already down about $2,000 on the value of your vehicle. So you could be underwater, especially at a higher interest rate. You haven't paid down enough principal yet to have equity in that car. And when the value goes down by $2,000 in 1 year, you're likely underwater, already on this car loan, especially something 30, $40,000 or higher. And we have a nice chart here for you. And this shows how in 2020, prices began to skyrocket. And basically, if you look over to the chart here, we took a escalator up, but now on the way down, it's more like a stair stepper down. It went down, came back up again during the summer, going back down again. So definitely prices went up a lot faster than they're coming down, which again surprised a lot of people with the way interest rates have been increased. People thought this would come down even more. Many people predicted a crash, but I've always said here on this channel that crashes are very unlikely to happen because things right now are a lot different than 2008. Remember, back in 2008, banks had capital requirements. They had to keep a certain amount of money in the bank before they could make out loans. Of course, loans were basically stopped when the failures happened back then, and that was before the bailouts, before TARP, the Troubled Asset Relief Program, and all that was rolled out. But up to that point, up until the point of the rescues, banks were very reluctant to loan out money and really pulled back on their lending, causing the price falls and causing the price decreases in the market correction that we saw in housing and real estate in a lot of different things, even in vehicles. Now, the prices dropped the most there for compact cars. It looks like over 8%. SUVs only down about 3%. Pickups actually went up a little bit in price. Mid-sized cars down about, looks like 5.5%. So you kind of get the picture. It's kind of a mix depending on what type of vehicle you're talking about. But if you want to talk about falling prices and possibly even crashing prices, well, let's take a look at what's happening with electric vehicles here. This is out of Inside EVs. First, let's go ahead and read the headline. Used electric vehicle prices plummet, sales overtake most new models. Now let's go down into this article. I had to scroll down pretty far to get the big scoop on this. The average price of a used EV, electrical vehicle, is now 27,800 in the US, falling 32% year over year. Wow. I would almost define that as a crash. And Tesla has likely influenced this trend. The average price of a used Tesla Model 3 has decreased by more than $9,000 since 2021. We reported on those price cuts right here on this channel, by the way. And there's also been a massive increase in inventory. Listen to this. Several factors contributed to the growth of used EV sales. For starters, the used EV inventory has grown threefold over the past 3 years, increasing from 11,000 vehicles in April 2021 to over 33,000 vehicles today. The share of pure EVs in this inventory has grown from 55% in 2021 to 73% today. The rest are plug-in hybrid. Now, something else that contributed to this boom in automobile prices that I don't think too many people are talking about is what they implemented a few years ago, where they no longer counted certain medical debt against you and other programs that actually caused people's average credit score to increase by about 20 points. And here's an article here out of Financial Times talking about just this here. Also talking about the late payments. Late payments rise on U.S. loans tied to inflated pandemic credit scores. People's credit scores went up a lot back then because remember, they didn't have to make payments. on a lot of things. Some people didn't even have to pay their rent. People didn't have to pay their credit cards and lots of other um, rescues that people were granted. And that alone caused credit scores to rise. So then lenders took advantage of the higher scores and the pandemic savings. People had more down payments to put down on vehicles. And of course, car dealers were hungry for that business. And here's how they broke it down over at Financial Times. Quote, consumer finance companies used this opportunity to juice up their growth at a time when funding was ample and consumers' finances had gotten an artificial boost. That's Mark Zandi, chief economist over at Moody's. He continues, certainly a lot of lower income households that got caught up in all of this will feel financial pain. He's using the word financial pain. Well, what else can we add to this? Let's talk about what I think looks like some price gouging from car dealerships and the enormous fees and markups that they're doing on vehicles. Let's take a listen to this clip right here from someone that bought a vehicle here recently. Take a listen to some of these pricing mechanism.
I just bought a car last week and this is what it costed. For context, I got the Toyota RAV4 XLE Premium. So the MSRP, or the base price of this car, was $32,375, but it doesn't stop there. There are so many other fees. Factory installed packages and accessories were $1,500. Port install.
That's a scam right there, what she just said. Factory installed accessories. So what they do is they advertise the car without these things that are installed. And then they say, by the way, once you want to buy the vehicle, by the way, there's these extras that are in there that we didn't include in the price. Of course, they don't say it like that. They try to put it in the paperwork sometimes without telling you. But let's continue to listen to what she's saying here.
Installed packages and accessories were $347. Delivery, processing, and handling fee was $1,335. So
$1,300 for delivery of a vehicle that's already at the lot. So they're charging you for the shipping of the vehicle. Again, not something that's in the price that they advertise, right? Strange, crazy, deceptive. Pick your word. What do you think about that?
overall, the dealer price was $35,584. So Toyota also has a $500 new grad college discount. So I got $500 off the selling price. And then there is another list of fees. So taxes was $3,925. There's like registration fees, which was $65, dog fees $85, vehicle license $238, and so many other fees. So once you add everything together, the final total is $40,561.54.
And you heard her list off all those extra fees, all those upgrades and things that weren't included in the original price. Ended up being $40,000 from what she started off at, what, 33,000. So pretty crazy. And we also know that a record number of people now have a car note, car loan, monthly payment of over $1,000. It's pretty common in the last few months here to see articles like this. Why $1,000 car payments are becoming the new normal. Car payments are $1,000 for a lot of consumers. Here's why. Talking about a lot of the things that we talked about today. And here's this one out of Car Scoops. A record number of new car buyers pay over $1,000 a month. This was at the second quarter. It's gotten even worse since then, I think. Car payments keep rising as 17% of new car buyers are paying more than $1,000 a month. 17%. Can you imagine if even half of them defaulted and we saw, 8, 9% of these cars get repossessed? So where do you think we're headed? I'll tell you what I think by putting on my blue blocker economic vision glasses here. I think we're headed for bigger and deeper price corrections, and the speed of the corrections I think is going to increase. So instead of 5% year over year, I think we're likely going to see another 5% decrease just in the next 6 months. So that'll put vehicle prices down about 10% year over year, or 10% in 18 months, I should say. That's what I see, unless something really crazy happens where there's this huge crisis and they have to roll out a bunch of rescue programs a la 2020. We are on the brink of World War III, it appears, just by reading some of the headlines. So I'm afraid that something like that could pop up, for lack of a better term. And therefore, that would be the excuse for the central bank to cut rates again back to near zero, to flood the economy with money, helicopter money, and who knows what else, right? Make it so where nobody can get their cars taken, right? So they could do a lot of things to prevent this collapse of car prices. But what are the odds of that? Well, that's what we have to weigh out together. That's what you have to decide when you're doing your due diligence and deciding if you're going to buy a car or not. So, would you buy a car today, or are prices still too expensive, or is something going to happen where prices are going to go back up? Maybe a chip shortage, a war between Taiwan and China, which Taiwan's the number one chip manufacturer in the world. If we see chips fall into shortage territory once again, we could see some price actions, maybe again to the upside. That would be pretty bad. But what do you think, everybody? Thanks for watching this report. Come back for more economic news. And by the way, if you look down here, right where my finger's at, that is a subscribe button. If you're not subscribed, please hit that and subscribe. You support this channel, and that way we can navigate this economic, financial situation together, and you can never miss an episode here. Thanks for watching, everybody. We'll talk to you very soon. Bye for now. Peace.